At the Lekki Free Zone, Lagos, a massive industrial complex rises from the swamp. It is the Dangote Refinery. It costs over $20 billion to build. It is the largest single-train refinery in the world. Its capacity is 650,000 barrels per day. The promise was simple: end Nigeria's dependence on imported fuel. For decades, Nigeria has imported crude oil and imported refined petrol. The refinery was meant to reverse this equation, but the challenges have been immense. Crude supply has been a recurring obstacle. Local production is low, and international oil companies prioritize exports. The refinery has had to source crude oil from abroad at a higher cost. The naira devaluation has made these imports more expensive. The unit cost of production has risen sharply. The domestic market is also difficult. The pricing regime is regulated. The government subsidizes petrol to keep prices low. The subsidy costs billions. The refinery cannot sell at market rates without breaking its agreement. It also cannot operate at a loss indefinitely. The company has delayed full production multiple times. Analysts estimate that the refinery is operating at barely half its planned capacity. The local distribution network is also another bottleneck. Pipelines are old and often vandalized. Trucks, on the other hand, are slower and more expensive. The refined product reaches the market, indeed, but in limited quantities. Consumers still queue for petrol. Importers still bring in foreign fuel. The refinery has driven down the price of diesel and aviation fuel significantly. This is a victory, but a bigger war is unresolved. The refinery needs stable crude, stable currency, and a stable pricing policy. None of these are guaranteed. The complex stands in the swamp, visible from the highway. It is a monument to ambition and the friction between private capital and state infrastructure. The tanks are full, the pumps are running, and the full impact of the refinery remains uncertain.